Imagine what's possible when learning doesn't get in the way of life. At Capella University, our game-changing FlexPath learning format lets you set your own deadlines so you can learn at a time and pace that works for you. It's an education you can tailor to your schedule. That means you don't have to put your life on hold to pursue your professional goals. Instead, enjoy learning your way and earn your degree without missing a beat. A different future is closer than you think with Capella University. Learn more at capella.edu.
This episode is brought to you by Amazon. Sometimes the most painful part of getting sick is the getting better part. Waiting on hold for an appointment, sitting in crowded waiting rooms, standing in line at the pharmacy, that's painful. Amazon One Medical and Amazon Pharmacy remove those painful parts of getting better with things like 24/7 virtual visits and prescriptions delivered to your door. Thanks to Amazon Pharmacy and Amazon One Medical, healthcare just got less painful.
Welcome back to the podcast, guys. As always, I'm your host, Akil Stokes. In today's episode, I want to share with you a piece of a presentation that we recently did during a 4-day workshop called Beat the House. In this presentation, we're talking about trading and gambling. And in this specific clip, I want to share with you a conversation about understanding the edge, understanding the game, and understanding what you need to do if you want to put yourself on the path to becoming a consistently profitable trader. Let's hop in. I want to start off, right, because I love the gambling theme. And I want to start off talking a little bit about a game-changing book for me. And there are a lot of game-changing books in my arsenal. We can talk about that at a later moment. But have you guys ever heard of the Market Wizard series or read any of these books? Give me a yes. If so, how many have you, if you have read them, how many have you read? I didn't know the stock market one existed, actually. I read 3 out of the 4 fully. I'm currently halfway through the Unknown Market Wizards, but these are a great series if you ever get a chance. Just briefly, what Market Wizards do is Jack Schwager, he interviews basically the top traders in the world, kind of gives their story. And there's no better way to learn than to find someone that has done what you're looking to do, study what they have done, use their their good times and their bad times as kind of chances to get through your journey and basically duplicate that. And the cool thing for me about Market Wizards specifically was that when I first got into trading, I thought that you had to be super smart. I thought that you had to have an Ivy League degree. I thought you had to be one of those type of people. Have you guys ever thought that? You need to go to university. You need to be, an expert in economics to be a good trader. Yeah, I thought that. So my entire career up to that point, I just asked myself the question, like, why do I deserve to be a trader? Like, I can't be a trader because I don't check all of these boxes. And the greatest thing about the Market Wizards book was that it allowed me to see that most of these traders, aside from one, I think one was just really, really good out the womb. He was just great, never lost, and good story, right? But most of these traders sucked. I'll say it again, most of the top traders in the world ever were really, really bad at the beginning of their careers. And what that did was that gave me hope, because at the time I was really, really bad as well. And it gave me hope that, hey, if these guys can go from this stage of being super poor skill-wise to eventually becoming the best, then why can't I do the same thing? And specifically to the gambling theme that we're on, I remember I think it was Hedge Fund Market Wizards, there was this interview, one of the traders that they interviewed, his name was, Edward Thorpe, I think it was, right? Edward Thorpe. And it's funny because Edward Thorpe, actually, very smart guy, like multiple PhDs, all that stuff. He actually started off as a gambler before making his way into trading, right? And he was a gambler, but he wasn't your conventional gambler, right? He understood everything that Jason told you earlier about casino games and how the casino has the edge, and that, if we play long enough, the average player, if we just play long enough, we are going to lose money, right? Because we don't have that edge. We have a negative edge in the market. And Thorpe's goal was to remove the gambling from gambling, meaning that he wanted to create strategies in the casino that shifted the edge into his favor. And he was able to do so. I think he did it about 4 or 5 games. I think roulette was one of them, baccarat, blackjack. There's another one as well. And he ended up shifting the edge into his favor. Now, the problem with this was that he got really, really, really good. And you may be asking yourself, why is that a problem? Well, if you get really, really, really good at consistently winning money in a casino, do you think the house likes that? Do you think casinos like those who come in and consistently win money? Yeah. No. So he was politely asked not to gamble. If you catch what I mean, they probably sent some goons his way and said, "You're not welcome." He was pretty much like kicked out and banned from casinos. But that ended up shifting his journey to the financial markets, which he saw as kind of the biggest game out there. There were no restrictions. If he was good, he couldn't get banned. And he ended up becoming an expert trader, which was pretty cool. And my journey was a little bit different, right? I sort of did the opposite, right? I always enjoyed gambling. I always enjoyed gambling, but I was your typical gambler where me and my buddy, we would go in there and we would play, and then sometimes we'd win and we'd make money, just like Jason talked about. And then eventually we'd lose it like an hour later, like, man, almost. And we'd do it again, and we'd come in, we'd make some money, we'd lose. I just no rhyme or reason for playing. And it wasn't until I got good at trading, just as Jason spoke about how trading has helped his businesses, trading has helped my businesses as well, but trading also helped my gambling, because once I understood what it took to be successful in trading, where it's consistency, having the edge on our side, proper risk management, proper kind of money management, wealth acceleration tools, right? Or systems. I implemented that into my gambling, and I became a really, really good gambler. Now I stopped. I didn't want to, get kicked out like Edward did, but it was very interesting, and it made me understand the game, right? My game of choice was craps. Any craps traders out there? Anyone familiar with the game of craps? No. It's the funnest game, man. There's people, there's cheering, and then you lose money and you go home depressed, but at least you have a good time. So, real quick, I'll make craps really, really short, right? There's a board in front of you, kind of similar to roulette, right? There's a board in front of you. It has all these fancy bets. You'll see there's numbers, just like in roulette. You can put bets on numbers, and there's all these like the sucker bets where it's like you can get 12-1 odds, but like it has to roll like a very specific number that has a very, very low chance of being hit. But those are the ones that like get people all excited and bells and whistles, but they just lose all their money on it, right? So pretty much with craps, you have 2 dice, right? You roll the dice, and whatever number comes up, if your chip is on that number, then you get a certain payout. If you don't, either stays there or you lose money, right? So winning and losing is all based on what number comes up on the dice roll. Now, we spoke earlier about the casino always having the edge. I want you to picture 2 dice, right? 2 dice, they have numbers or dots 1 through 6. Can anyone tell me what number, when you're rolling 2 dice, has the highest percentage of being rolled? What number? Again, dice are labeled 1 through 6. You have 2 dice. What number has the highest probability of being hit? 7. Now, you'll notice something on this chart. Or maybe you won't notice something. It's not as creepy as that backwards head lady, but Stevie says why. If you just add the numbers up, 7 could be hit. What is it? 6 ways, right? You can have a 6 and a 1. You can have a 2 and a 5. You can have a 3 and a 4, and then the exact opposite for the other dice, right? So 7 has 6 chances of being rolled. The next 2 are 6 and 8, which have 5 chances of being rolled, and then it goes on from there. The sucker bets, like Snake Eyes, for example, have like 2 chances of being rolled. It has to be a 1 and a 1. So that's why the payout is great, but you're never going to hit that, and people lose money on it. But if you notice on the chart, once you look at the chart, or chart trader talk, right? The game in front of you, do you guys see 7s on there? Why don't you see any 7s on that chart, right? These are all the ways that we can win. We can win 4, 5, 6, 8, 9, 3, 11, 12, 2. Why don't we see any 7s? Who can tell me why? Why can't we win on 7? Because that is the number that has the highest probability. That is the number that has the edge Who wants to have the edge? Does the casino want to have the edge, or do they want you having the edge? The casino wants the edge, right? So pretty much in craps, if 7 is hit, everyone loses and all their money goes away. The casino wins. So it makes sense that the number with the highest probability of getting hit would be the one that the casino takes home all the cash, right? And we used to go in here again and bet random stuff and win sometimes, but then most likely lose and I'll give it back. And once I got good at trading and understood edge and probabilities, what me and my buddy started doing was we started looking at craps a different way. Instead of making random bets, we made very deliberate, purposeful, consistent bets. Now, we didn't bet 7, right? We didn't necessarily have the edge in our favor, but we bet the numbers that gave us the best probabilities, and that would be 6 and 8. 6 and 8 are the numbers. If 7 has 6 chances of getting hit, 6 and 8 have 5 chances of getting hit, right? So we put ourselves in a position where we had the greatest probability. And I won't get into too many details, but long story short, we added a risk management and a money management tactic to it, where our job would be to do this. We knew that, and this is the one thing we didn't have numbers on, but we knew from experience, right? At some point, if you play for long enough, there's a hot roll. And what I mean by a hot roll is when people roll the dice and that 7 is never hit. So as long as the 7 is never hit, your money is safe. Your money's only going when 7 is hit. So at some point there would be a hot roll. So our job, right, was to survive until the hot roll, right? So what we would do is we would bet 6 or 8. Once we hit on 6 or 8, right, we would cover our losses, right? Imagine moving a stop to break even, putting ourselves in a risk-free trade. Does that make sense, guys? We would take our profit, we put it back in our pocket or in a side spot, so we at least made back our initial bet. Now we can be free. As we would continue to win, we would then take the profit and then we would spread it out across the rest of the numbers. So if I won, I would put some money on 5. If I won again, I put some money on 9. If I won again, I put it on 4. I put it on 10. So we would have money, if you can imagine, on all of these numbers. And then what happens after you have money on all of the numbers? Yep, we're increasing our odds. We then win every time the dice is rolled and it doesn't hit 7. Does that make sense? Now, again, you had to survive towards the hot roll. And this is the time element that Jason mentioned, right? You're not going to go out there to the first series and like hit right away, right? You have to play and lose and play and break even and play and win a little bit, right? And this is where the money management tactic comes in of like making sure you're not betting crazy, knowing exactly what you need to bet when you need to increase. But what we were doing, we were trying to shift the edge in our favor. And then the last thing we did, and then if you make a lot of profit, then there are rules where like you can take a home run trade and do one of those fancy things in the middle. I never did that, but my buddy did. But the thing was this: even though we're shifting the odds in our favor, we know that is short-lived. The longer we stay, the more opportunity we have to lose. So once we got that hot roll, and once we just made as much money as we could, what do you think we did after that? We left. And I'm not lying when I say that there are times we would drive like 4 hours to a casino. We may play for 10 minutes. If that hot roll came quick, guess what? We would leave. Because every time we stayed longer, we would give it all back because the edge would play out. And this reminded me of kind of you guys have heard, I'll get to the price stuff in a little bit. I'm on a rant now, right? You guys ever heard of Richard Dennis and the Turtle Traders? It was so Richard, if you get a chance, look it up. It was a great experiment. It was pretty much an experiment by Richard Dennis and William Eckert about, they were pretty much betting with each other that if I published a set of rules in like a newspaper, basically if I had a set of rules that had an edge, I can pretty much give it, I don't want to say every trader because there were tests that they had to take, but I can give it to an average trader and they should be profitable. And the answer was yes. Now, there were some turtle traders that were better than others. And what that came down to, the ones that were better were the ones that were consistent. So one of the best turtle traders ever was named Curtis Faith. He has a great book called Way of the Turtle. And he said what made him stand out amongst the others was that, they traded a trend continuation system where you're trying to catch big trend moves. And sometimes that means you have to lose for days and weeks and months and then still have enough trust in the system to place the bet again. Now, let me ask you this. Do you think you can lose for a month straight and still place that next bet? A month straight, no victories. And this is where the psychological element comes in, right? Probably not. And that's what separated the good turtle traders from the great ones. The great ones would take their losses, they would trust their edge, trust their probability, trust their system, and they would survive long enough to get that big home run that would make up for the previous months of losses. Right? The ones that weren't as successful, they would get scared. They would not take trades. Maybe they would do it with a smaller position size, and they would basically sabotage their edge. And it's very, I honestly couldn't do that. I'm sure Jason's the same way, right? And this is why Jason mentions we want to be above 50% in our win rate, because psychologically, it's very difficult to be a 30% trader with your main strategy. And we'll get into that later, but that's kind of part of knowing yourself as a trader, knowing that we are human beings. There is a psychological element to it. We want to avoid putting ourselves in the positions where we're likely to make mistakes, right? If I know that one of my flaws is that I'm going to lose trust in my system, I'm not going to take the trade, and that's going to happen if I lose too much. Do you think I'm going to be a successful trader if I have a system that is wildly profitable but wins 20% of the time? No, because I'm asking myself to make a mistake. So I'd rather trade a strategy that makes less profit but puts me in a psychological state that's better, because I know I can actually follow through with that. And that's something that most traders don't understand, because most people just, I'll do whatever it takes to make the money. And you say that until you're in the mix. You say that until you're on day 30 of a losing streak and you're freaking out, right? So it is that blend. But the point I'm trying to make, getting back on subject, is that we need to understand our edge. We need to trust our edge. And that all starts with understanding the game, right? If you don't know how roulette works, if you don't know how craps works, do you think you can develop a strategy that takes advantage of it? Do you think you can create a strategy that puts you in a position to have an edge? One of the things that we hate seeing is we hate seeing traders that throw all these indicators on a chart, but don't actually know how their indicator works. Right? Similar type of idea. So we need to understand the game, and it all starts with understanding price action, right? It doesn't matter whether you're going to be a trend trader. It doesn't matter whether you're going to be a counter trend trader. You can be a indicator-based trader using moving averages, MACDs, whatever you want. If you can understand price, it's what allows you to understand the game. If you can understand the game, then you can create an opportunity for you to have an edge. And more importantly, you can trust it. And real quick, because I know I'm going to get this question about indicators. What moves first, indicator or price? For you guys that are somewhat familiar. Price, right? Does a moving average move before a candle is printed, or does a candle become printed and then a moving average moves based off of it, right? All indicators lag. Even the greatest indicator of all time, price action, that is technically lagging, because a order has to come in and be filled before a candle even prints. So even that's lagging technically, right? So if you understand price, you can understand how and why your indicator moves the way it does. You can understand your indicator better, and you can put yourself in a position to use that indicator to either help with your edge or create an edge in its own right. So for even the mechanical traders out there, it's super, super, super important. So let's dig in the price action a little bit, and we're going to make this as simple as possible. It's one of my goodness. Hope you enjoyed. Don't miss our next workshop. We do a few of these a year, but make sure you stay in the loop. So make sure you're subscribed to the podcast. Make sure you're on the YouTube channel. If you've ever taken a trial membership with Tier 1 Trading, you should be on the email list, so you'll get that email when it comes out. But stay in the loop. They are jam-packed full of value. They don't happen that often, so make sure you don't miss it the next time it comes around. All right?